Good afternoon, everyone. This is Kelsey Jones with Illinois WorkNet. Before we get started today, I just want to make sure that you have identified that your organization is present using the poll in the middle of the screen. You could just go ahead and select the organization you're here representing. That would be great. And of course, there's always the chat pod on the left side of the screen where you can comment or ask questions throughout the webinar today. And with that, I will hand it over to Aaron.
Good afternoon, and thank you for joining us here. I'm kind of filling in for Natasha. She is out of town this week, and Natasha really is our expert on the Illinois WorkNet, and so I will not be sharing as much about the Illinois WorkNet this time. Just wanted to share some other information with you. And just a moment, I'm going to get my screen shared. One of the things that I wanted to discuss with you primarily today had to do with our reporting requirements, and in particular some of our financial reporting requirements. And so I know usually that the individuals that we have on these calls are usually our program staff, and that's fine. This is going to be relevant and important for program staff. Some of it will get into some details that maybe program staff might not have much to do with, but definitely when it comes to expending grant funds and keeping account of those grant funds, this is something that everybody, I think, would benefit from. So just a moment here. All right. And hopefully you are able to see my screen here in front of me. One of the things that I wanted to bring up are our expenditure documentation forms. The expenditure documentation forms that we used last year they had some challenges with them, I would say. That we are about a year and a half into what we call the GATA process here, which is the Grant Accountability and Transparency Act. We've had a number of GATA trainings recently, and I know I've mentioned to some of you got to participate in some of those last year or in the past. Some of you have caught some of the trainings here at the beginning of the year as well. But the GATA process has really come to govern everything that we do when it comes to the awarding of funds, the making of awards, and the accounting of funds. So when we have tried to track these funds in the past, we've used our own expenditure documentation forms, and they were not really well coordinated with the GATA budget that everyone was required to use. So of course this year was a little bit different. I know last year we were still approving budgets at the end of the year, and this year we had all of the budgets approved. We were required to have all of the budgets approved up front before we could even issue the contract and publish the contract. So this year all of the budgets are locked in and are have been entered into the CSA system. And so what happens with those budgets are we will take your budget amounts and we will enter them into our expenditure documentation form. Chelsea, can you guys see my expenditure documentation form on your screens?
Yes, we can.
Okay, very good. So the expenditure documentation forms will come as an Excel spreadsheet, but I want to point out that the spreadsheet is such that it has multiple sheets along the bottom here, kind of as tabs that you could click on. Each one is a separate sheet. There will be a monthly sheet for each month of the grant year. For the majority of you, that will start in November. We did have a couple of our providers who had some pre-award costs starting October 1st. For those that requested and received pre-award costs, we'll put an October tab on there for you as well so that you can fill out. But each of the tabs here along the bottom will be for one of the months that you'll report your expenditures. But everything will start on this approved budget tab. We will fill out the approved budget tab. We'll put your agency information here. So agency ABC in this particular case. And we'll leave this for you, for your organization, to put your report contact information in. So whoever is your report contact, you guys can fill that information out for us. This will be pre-filled with your FEIN, your DUNS number, your contract number, the CSFA number. All of that will be pre-filled for you. We'll also indicate if you applied for indirect costs. We will indicate, your indirect cost rate. So let's say you applied for an indirect cost rate of 10%, and that was the de minimis rate, or you might have had a different rate with a negotiated indirect cost rate agreement. But we'll just, for today's example, go with the 10% de minimis rate. In that particular case, your indirect cost base would be your modified total direct cost, MTDC. And we would just fill all this out, and we would actually lock this budget form, meaning that you as providers would not be able to go in and change this information. And there's a reason for that. It's because this information on the expenditure documentation and certification form needs to match your budget in the CSA system exactly. Your CSA budget is your budget, and your budget doesn't change unless you change the budget in the CSA system. There's a process for doing that. In fact, it requires a contract amendment. You'll notice this year it's a little bit different. Your budget is actually part of your contract, which is why it had to be approved up front before we could issue the contracts, which means that if you need to do a budget revision, it will require a contract amendment. And so that's a very formal process, and until that process takes place, your budget is whatever the CSA system says it is. So with that being said, that's why we'll put this information into the expenditure documentation form, and we will just lock that information in so that it won't be changeable. The only fields that will be fillable here on this form will be the report contact information, and then the authorized signature at the bottom as well. So we'll ask that that somebody signs that the budget is accurate and it looks correct. We'll have you review it, of course. If we have entered something into the budget that does not match your CSA budget, we will definitely get that corrected. So once we get your budget information in, and I've just made up kind of a fake budget, okay? I've added some budget numbers here, and let me see if I can get this expanded there a little bit. I've just made up some fake numbers, and you'll see that the budget categories here on the left correspond exactly to the GATA budgets that you've all filled out. This is something that's different. Last year our budget categories did not. This year they have. And so we've got our funds in here. We've got our total direct costs of $200,000. I haven't yet entered any indirect costs in here. You might think that just because you've got $200,000 in total direct costs that you would automatically be eligible for $20,000 in indirect costs. That's not necessarily the case. Your modified total direct costs by statute exclude things like rental costs. They exclude things like participant support costs that we mentioned of our youth wages and benefits. And it will exclude things like, I'm trying to think, equipment is another one that's excluded from MTDC. So a number of costs are actually excluded from MTDC. We will see that, for example, this second column here will tell how much of these funds that were in your budgeted column are actually allowable in your base to calculate indirect costs. So usually things like personnel would be allowable in your MTDC base. So maybe all of your personnel and all of your fringe benefits. Usually travel would be allowable. We would pull all this, by the way, from your budget. Your budget actually has your base, and it includes your base for each of these categories. So I'm just going to kind of make up some of these numbers here. Let's say that your occupancy costs of $5,000 are all rent. Well, we would not be allowed to include those in your base. So we'll just fill in some of these numbers here. Your direct administrative costs are allowable in your base. Usually the miscellaneous costs is actually where I requested that most of you budget your participant support costs. So participant support costs would be things that go primarily to the youth participants. Now, granted, the entire grant goes to serve youth participants, but participant support costs are specifically defined in a set of federal regulations that are kind of our go-to regulations here when it comes to grants, and that's 2 CFR 200, 2 the Code of Federal Regulations 200. We use 2 CFR 200 basically when we have any question about the grant process. We will go to 2 CFR 200 and look to see what the statutes say. And so, our miscellaneous cost section is where I tend to have you put participant support costs, and that makes it easy for me to identify whether or not they should be allowable in your MTDC base. And then we've got, our youth wages and benefits would not be allowable in the base. So what we're left with here is of the $200,000 of total direct costs that you've got, you might have $86,000 in your MTDC base, of which you would be eligible then potentially for $8,600 of indirect costs. So anyway, like I say, all of this will already be in your approved budget in the CSA system, and we will just take that information off the approved budget and put it into a form like this. If you have any matching funds, we would also include those. Now, the CYEP grant is not one of our grants that requires any matching funds. So, if you didn't budget any in your initial budget, you didn't apply with the intent of using any matching funds, that's fine. We just won't put any there. And finally, the narrative over here is where we might list, what you might spend those budgeted things on. So, for example, if you budgeted $50,000 for personnel, we might say in the narrative that that's going to cover 3 staff, a program coordinator, a case manager, and or let's just say 2 case managers, okay? And we would just list things like that. And we would say, like, fringe benefit is 20% of salaries, covers, health, FICA, life, dental, etc. We would just list those things in the narrative. Where would we get that information? We would get that from your budget, and we would go through and we would just make a short, brief entry as to what these things are being budgeted for. Guys, I have to tell you, I cannot emphasize this enough. If you hear anything today, please hear this. You have got to follow your budget. We have some programs that we are still looking at from FY17, and we're going through budgets and we're going through expenditures, and we'll have to tell providers, hey, this is a fine expense. This would be absolutely allowable if you would have budgeted it. Let me give you a classic example here that people will budget in their approved budget. They will budget in their travel expenses for mileage, but then in their expenditure reports, they're charging us for parking, or they're charging us for gas, or they're charging us for rental car fees, or they're charging us for hotels, or meals, or airfare. Look, if you budget for mileage, you get mileage. That is what you get. If you want to budget for those other things, you can do that, but you would need to revise your budget to do that. So it's really, really important that when you are spending funds, that you know what's in your budget. And so that goes for both our program staff and our fiscal staff that are on the call with us today. Our program staff, you need to make sure that you are familiar with the budget so that you know what has been budgeted for, and you don't incur expenses for things that aren't in your budget. Another thing that we'll see, sometimes people will budget for occupancy, and they'll budget rental costs in their occupancy, and that's the only thing they budget. They'll say our budget is $5,000 a month in rent, which includes utilities, and we'll say fine. But then they will expense, pest control, or they will expense maintenance costs, or they will expense the cost of a security system or something like that. Again, if it's not in your budget, specifically in the budget worksheet or your budget narrative, when we go to do monitoring visits and we look at your expenditures and we compare them against your budget, they're going to be unallowable, even though they might have a programmatic purpose, even though they might be, reasonable in all other respects. We need you to budget for them. So that's really important, okay? And then also, we need you to stay roughly, and I say roughly because there are some, there is a little bit of flexibility in this regard, but we need you to stay within the amounts that you have budgeted. So for example, if you budget, $5,000 for an audit, and it ends up costing $8,000, that's going to be unallowable. It's going to be unallowable to the extent that it exceeds your budgeted amount. Now, I mentioned that that's roughly. There is some flexibility when it comes to your budget. The uniform rules say that you can vary your budgeted amounts by the greater of either $1,000 or 10% of the line item. Okay? So for example, if we pick this line item here in personnel, and let's say you budgeted $50,000 for personnel, but it turns out that somebody ended up working more hours a week than you expected, or their wage that you anticipated was slightly under, the wage that you ended up paying was slightly over what you had anticipated. And so you could vary your personnel line by up to $5,000 because it would be 10% of your $50,000 personnel line item there. So you could vary that line item up to $55,000. When you look at the travel line item there that I've got, and I've got $1,000 in the travel line item, you could potentially increase that line item by an additional $1,000 because you remember you may transfer the greater of 10% of the line item or $1,000. Well, in the case of the travel, we already have $1,000 budgeted. 10% would be only $100. So if you were bound by just the 10% rule, you could only go up to $1,100. In this particular case, you could budget all the way up to an additional $1,000, or you could vary your expenditures without needing to do a budget revision. And let me say that again. Those are what we call discretionary line item transfers because you are making the transfer between approved line items within the discretionary amount of 10% or $1,000. If you make a discretionary line item transfer, let's say you increase one line, you are going to have to decrease another line. And that discretionary line item transfer limit also applies to the amount that you're taking funds from. So for example, if you're going to increase your personnel by $5,000, you can do that without needing a budget revision. You just make the expenses and you don't need any budget revision for that. However, if you take that $5,000 from the $10,000 fringe benefits and you reduce it from $10,000 to $5,000 and you move $5,000 into your personnel, you would need a budget revision for that. Not because of the category into which the funds are going, but because of the category out of which the funds are coming. So because if you take $5,000 out of your fringe benefits, you are going to exceed the $1,000 limit, and it's going to be 50% of your line item, which is going to exceed that 10% limit. So that would trigger the need for a budget revision. So in other words, we spend a lot of time trying to look when somebody needs to expend funds and have a little bit of flexibility in their line items, and they suggest, well, maybe I need to do a budget revision. We would really look to see if you really needed to do a budget revision or not. So we do have a form before you would actually do a budget revision. We'd have a form that we would send you asking you to tell us what you think you need a budget revision for and where you would be moving money from and where you would be moving money to. We would look and we would see if we could decide whether or not a budget revision was actually necessary. So, and if it is necessary, then there is a process an official process for revising your budget in the CSA system. But to be clear, your budget does not change until it's officially changed in the CSA system, okay? So once we get the budget into our expenditure documentation form, I'll zoom out just kind of so you can kind of see it as a whole here. It's just a sheet printed in portrait there, and we would send this to you. You would verify that it looks accurate. We would have somebody from your organization sign the budget electronically here and date that the budget looks accurate to you. And then you would begin putting in your monthly expenditures. The reason we need to have this discussion today is because monthly expenditures are due on the 15th of the month following the end of the month. So for example, expenditures for the month of November are due by December 15th. And I have not yet sent this expenditure documentation out, this form out yet, because I wanted to make sure I had a chance to go over it with our providers on the webinar today. So I wanted to make sure that I explained this, and then I will be sending this out shortly after the webinar so people can begin to work on this. But the monthly expenditure report will look just like this here. And what you will do is, in each category, you'll list your expenses for the month. And then you'll tell me how much of those expenses were included in your indirect costs base, okay? And so, for example, you know, if you've got $50,000 budgeted for personnel for the year, and we're going to divide that roughly by 8 months, so about $6,000, a little over $6,000 a month. So let's just say we are spending $6,000 on personnel this month. And you might tell me in the narrative what you spent that on. And again, it should be we spent the money on a, you know, program manager and 2 caseworkers, okay? And you'll just make a note as to roughly what you spent that money on. Some programs are larger, some programs are smaller. So, for example, if you have, you know, 19 staff members, you don't have to list every staff member separately on this little narrative. You could just mention that, you know, we had 19 staff that we paid out of this fund this month or something like that. But, you know, just give us a little bit of a note. And the idea is we should be able to take a look at what you put in the narrative there and to go back and compare it against your budget and make sure that what you are spending the funds on corresponds to your budget. So if, for example, in supplies, you know, you list a big screen TV or something like that, but there is no big screen TV in your budget, you know, we'll question that. We will probably follow up on that. So you'll list your personnel costs there, and you'll make a note of what that is, and then you'll tell me how much of that was included in your indirect cost base. And again, you'll know because it'll come out of your budget. You'll know what categories could be included in your indirect cost base and whatnot. Usually personnel is something we would include all of your personnel costs in your indirect cost base. And you can see that if we go back to the approved budget tab, that we have, you know, $50,000 in personnel costs, and all of that was included in our indirect cost base. So in the month of November, when we budget $6,000 in personnel, 100% of that should also be included in our indirect cost base. That's important. That's really important. I'm going to explain why when we go to calculating the indirect costs there, okay? So let's say we spent, I'm going to say $1,200 in fringe benefits, and again, all of that was included in our indirect cost base. And let's just leave it at that, okay? Let's say those were all of our expenditures for the month of November. And of course, you probably will have more but in any given month, but let's just leave it at that for simplicity, okay? So what we've got here, when we look at the bottom, we've got our total direct costs of $7,200, and we haven't yet recorded our indirect costs, but we will in a moment. And so that right now, as it stands, we've got $7,200 of monthly costs here for the month of November. Let's say, though, that we spent, let's say we had some indirect costs this month, okay? And that we had indirect costs of $2,000, all right? So our total monthly costs are $9,200. However, I want you to see over here. This is what will calculate your payment here. When we look at this section here, this is what we turn in to our DHS fiscal department, our payments department, and this is what they will make payments based on. And it shows you've got total direct costs here of $7,200, but that your maximum eligible indirect costs are $720. And why is that? Well, the reason that is because of your $7,200, $7,200 of that was included in your base, and when we multiply that by your indirect cost rate of 10%, you have so far only qualified for $720 in indirect costs. And so we will only give you $720 of indirect costs, even though you're claiming that you spent $2,000 on indirect costs this month. So of your $9,200 in expenses, your total eligible payment for the month of November will only be $7,920, because we're going to give you your total direct costs plus your maximum eligible indirect costs will give your total payment. Okay? And I know that sometimes we've gone over this. We've been using this form for a couple months with some of our other programs that started on July 1st. And I know that a lot of them have had questions about this, but after a month or so, they've got it figured out. But I just want to make sure that if our providers have questions about this today, that you've got an opportunity to understand how we calculate that and to ask questions about it. So here's the next thing then. You'll see this box that says there are some carryover costs here. Well, carryover costs are costs that you actually incurred, but that you have not yet been paid for. Now, as of November, since this is the first month, your carryover costs are going to be zero. You won't have incurred any costs prior to November, except for those who have pre-award costs in your approved budget. But for the vast majority of you, you won't have incurred any costs prior to November. But then let's look forward now at December. And here's the deal with December. When we look at December, and we look here at the bottom now, the sheet now shows, it records $1,280 in carryover costs. Where do those costs come from? Those costs come from over here, from November, where you had $9,200 of costs, but you were only paid $7,920. So the difference, the amount that you have not yet been paid for, are your carryover costs. So in the following month, you are eligible for $1,280 of carryover indirect costs, assuming that you put enough in your base. Somebody using the chat box over here, somebody who is mathematically inclined, tell me, how much money would you have to spend in your indirect cost base in order to claim all of this $1,280 for this month? I want to see if anyone can catch this here. Looks like maybe we have some people typing here, so we'll see. Warletta says $1,280. Well, that's the amount of carryover indirect costs that you have, but in order to claim that, you would have to spend $12,800 in order to get those costs back. So, for example, let me show you. Let's say it's the month of December now, and let's say we record expenses for personnel. This time we've got $12,000 in personnel that we're spending this particular month. Okay, and of that $12,000, all of that is included in your indirect cost base. And let's say we spend another $2,000 in fringe benefits this month, and all of that is included in your indirect cost base. And now when we look, and let's say we didn't spend any indirect costs in the month of December, let's take a look at what we are, what we're going to get in terms of a payment here. We have $14,000 of total costs, okay, for this month. We have a maximum eligible indirect cost payment of $1,280 because you have earned that $1,280. You have already spent this money. You spent it last month in the month of November, but you have earned this $1,280 this month because you have spent enough in your base to qualify for that expenditure. So in the month of December, we would pay you what you actually spent in your total direct costs plus your carryover indirect costs. We would also pay you for that because even though you did not spend this $1,280 this month, it was money that you had spent in a previous month that we had not yet reimbursed you for because you hadn't spent enough in your indirect cost base. It looked like I saw a hand from Yvette earlier. Is that right? Yvette, do you have a question? If not, I mean, if you do, please type it in the chat box. If not, I'll just keep going on here. But the idea is, and there's a reason for this, okay? And we kind of talk about, earning your indirect costs. So here's the reasoning behind this, that if you had, let's say in your budget, in your approved budget over here, we approved your budget with $8,600 of indirect costs, meaning in order to get that $8,600, you would need to spend $86,000 to be able to qualify to earn this. Otherwise, we would potentially be paying you at a higher rate than was allowed. So for example, let's say at the end of the year you haven't spent all of your grant funds. Let's say you have only spent $50,000 in your indirect costs base, yet we've paid you the full $8,600 that you budgeted. And so in that particular case, we will have overpaid you in indirect costs, and you'll be required to pay it back because you won't be eligible for a greater rate of indirect costs than your budget will allow, okay? And so I want to try to be really clear on that's why we have set it up that way, is that we want to make sure that at most we are not paying you more than what your indirect cost base that you've spent times your indirect cost rate will allow, okay? But the good news is, again, if we go back to November and you say, well, hey, I spent this money, but I didn't get paid for it, it's not as if it goes away or that November is your only opportunity to then get reimbursed for that money. If in December you spend more in base, you then can potentially get paid that money back. So let's say going back to the month of December here, if you spent an additional $1,000 in indirect costs in the month of December, what we would do is let's see, your maximum eligible indirect costs that you're going to be paid for here is $1,400, and so your total eligible payment here is going to be $1,500 or $15,400, and so it's set up. It's designed to only allow you to be able to charge the indirect costs that you've actually earned. All right, let's see. Something else I wanted to point out here is near the bottom we have this. You'll do this for each month, by the way. So you'll fill out November's, December's, and go on. At the bottom of each is a certification statement. Somebody from your organization will sign that certification statement, and you will send this in to us. You will only send the spreadsheet, okay? Sometimes people will want to, they'll want to print the spreadsheet as a PDF or something like that. We need you to send the spreadsheet directly. The spreadsheet is designed to, for us to have some checks in it to make sure that we are getting the numbers accurately. One of those checks, for example, is your amount that you include in your base in a particular month cannot be more than your total expenditures for that month. It can be less than, but it can't be more than. So for example, if you only spent in the month of December here $2,000 in direct costs there and fringe benefits, you could not then say $3,000 was included in your base. If we had seen that, we would note that it's red. We would note that there's a problem, that you've recorded a number inaccurately, because it's not possible that you've spent $3,000 in your indirect cost base when you only spent $2,000 for the month. So this number in your base cannot be more than your actual grant expenditures for that month. So those are the things that we'll look for. One of the things that we'll look for too, when you report expenditures each month, we will check this Cumulative Amounts tab, and you should check this as well. And what the Cumulative Amounts tab does, it shows a lot of numbers here, and I'll kind of explain it. The Cumulative Amounts tab is a snapshot of where you stand year to date. So for example, when we look here, it will tell us how much you've spent out of your overall personnel budget. For example, when we look at November, we've got $6,000 in personnel that we spent. In December, we spent $12,000, which then puts us at a total of $18,000 year to date, which is 36% of your overall personnel budget. You have $32,000 in funds remaining. Of that, you've got $18,000 in base that you've spent. You haven't matched any funds. So this is this percent of budget expended. This would be your matching funds percent of budget expended. Okay, and then down here, this will give us a cumulative through each month. So for example, at the end of November, your total direct costs were $1,700. At the end of December, your total direct costs were $21,200. Your eligible payments here would be $7,920. Your eligible payments here would be $23,320. So we'll see a snapshot for each individual month here at the bottom, okay? In the Cumulative Amounts tab, I want to show you, this is one way where you can track your discretionary line item transfers. So for example, let's say we've got $32,000 remaining, right, in our budget for personnel. And let's say I'm going to go I'm just going to go to June. Let's say it's the last month, and we spend let's say we spend $33,000 in personnel in the month of June. Okay, and now our cumulative amount sheet shows that we've spent $51,000. And I don't know if this shows up really well on your screen, but you'll see when you get this form that the number will show up in yellow. And what that means is you have spent more than your budgeted amount. Our budget, remember, for personnel is only $50,000. Yet we've spent now for the year $51,000. Now this is still okay. Why is this okay? Because we have not exceeded the discretionary line item transfer amount. Because remember, we have the greater of $1,000 or 10%. Well, in the case of a line item where we budgeted $50,000, we can exceed that $50,000 by up to 10% or $5,000. So at this point, $51,000 is showing up in yellow to tell you, and to tell us as DHS staff when we're looking at these things, it's showing up in yellow to tell us you have spent more than your budgeted amount. However, you are still within the discretionary line item transfer. But let's say we go back to June here, and now let's make it $40,000, okay, in the month of June that we spent on personnel. And now when we go back to the cumulative amounts sheet, you'll see that now it's showing $58,000 total, and it's showing up as red. And that's there to tell us that you have not only spent more than your budgeted amount, but you have even exceeded the discretionary line item transfer amount. So for example, you could go up to $55,000 without needing a budget revision. But if you're hitting $58,000, you need a budget revision. Something is wrong, and you have overspent your budget, and you need to revise your budget. And to be clear on this too, if you think you're going to need to revise your budget, you need to do so. You need to let us know before you overspend, because we're not obligated to approve a budget revision. There are good reasons for a budget revision, and if you let us know those up front, we can take a look at your request for the budget revision, and we can decide whether or not it's going to be allowable. But if you spend the money and then request a budget revision, we may not. We may say, no, that budget revision is not acceptable, and you're going to have to pay those funds back. So it's really important that you mention to us if you need a budget revision before you actually need one. So this is designed to kind of help you keep track of your spending. So for example, if we look through, and this is an 8-month grant program, so if we're 2 months through the year and you've spent 40% of a particular line item, you need to be careful, because you're potentially going to run out of funds well before the end of the year. Some things are like that, and some things that's okay. For example, a number of, like in your supplies category, maybe most of your supplies were computers, right? Let's look at what we had budgeted for supplies. We budgeted $2,000 for supplies, right? And let's say that was that included 3 computers at $600 each. That's $1,800. Well, at the beginning in November, you may spend $1,800 in supplies in your first month. And when we look at your cumulative sheet, we're going to see that you've spent 90% of your supplies budget, and it's only November. Well, that's understandable, because you're going to purchase your computers at the beginning of the year, and it's going to use most of those funds. So it's there to kind of give us an idea of what's going on with your expenditures, but also to give you an idea of what's going on with your expenditures. Okay? And you'll see too here the rules, the discretionary line item transfer rules allow for transfers between approved line items. So for example, when we look at our budget, we didn't budget anything for equipment or contractual. The discretionary line item transfer does not apply to items where you did not originally budget funds. So, for example, if you wanted to move $100 into supplies, you could without needing permission from DHS. You would just expend the money. However, if you spend $5 in contractual, you're going to need a budget revision, because the contractual line item is not an approved line item. You didn't budget any money in it, and so therefore it's not an approved line item. So if you need to spend any money in any of these categories where you did not originally budget funds, you would need to do a budget revision first. Okay, you would need to contact us and let us know. And if it's something like that, it's not a problem usually. If you say, hey, I failed to consider that I might need this, I need it to effectively operate my program, and you contact us, and it's reasonable and necessary, and we're happy to work with you on a budget revision for something like that. It may seem insignificant, but I'm telling you, I can't reiterate this enough. If you spend funds on things that are not in your budget, they will be unallowable costs, and you will have to reimburse those funds. So make sure that you're spending money that's in your budget, and if you need to spend money on something that's not, please contact us, and we will definitely work with you on getting that taken care of, getting that up to date, okay? Now, that's the expenditure process, okay? That's the expenditure reports. You'll submit those once every month starting here in December. But I want to point out that there is something else that is going on in the state when it comes to reporting. And I have tried to develop a fix for this that's going to be convenient for you. We received a message not long ago from DHS telling us that the state of Illinois, because of the GATA process and the drive to make everything really one size fits all, this notion of GATA and one size fits all, in some ways it's nice because it creates a lot of consistency across the board, which a lot of our grant recipients wanted consistency. They would say, hey, we apply for grants one way with one provider or one state agency, and we apply for grants differently with a different state agency, and it was confusing. And so GATA brought about a lot of consistency, which is really nice, except that programs can be very, very different. Grant programs can be very, very different and have different requirements, different reporting requirements, different match requirements. There can be a lot of things that are unique to a particular program. And so sometimes when they will say, hey, this is our one-size-fits-all model, sometimes it doesn't work out very well. And the case in point is that we need monthly expenditure reports like the ones that I am showing you today. The state has actually prescribed a form for us to use, and I'm going to show you what that looks like. And it is called the Periodic Financial Report. And it's like a 6-page form here that includes instructions. It's got some definitions here on the next couple of pages. And then this is the actual form. And what they want you to do is to fill this out with your grant name, your grantee number, etc. They want you to fill all this out. They want you to add lines of expenditure. So for example, this is where you would put like personnel and fringe benefits and travel, etc. And you would list your expenses on this, what they call the PFR, the Periodic Financial Report. Some of you may have even seen this report in both online on the GATA website or during a training. And this is the state's kind of version of the expenditure documentation form. However, like I say, we will still be needing you to use our expenditure documentation form. So what we were looking at, you were going to end up having to report things twice, essentially. You're going to have to give us this expenditure documentation form for each month, and then you are also, on at least a quarterly basis, going to have to fill out one of these periodic financial reports. And that was going to be incredibly inconvenient for our providers, and it was going to be time-consuming, and it leads to the possibility that we're going to have inconsistent data. For example, this was something that was noted on our performance reports last year. I would have monthly reports, and I would have a provider tell me that in the period they enrolled 5 new people in the program, and 8 of them were in school and 4 of them were out of school of the 5 people that they enrolled. Where we would have data sometimes that didn't make sense, and people were putting in numbers that couldn't possibly compute, right? Well, this might happen where when we look at our expenditure reports, you've reported, $12,000 in personnel, yet for the quarter, but then you come over here and you'll report $15,000 on this report form. And so what we have done is we have taken this required report form, and it is required of everyone to fill one of these out. We've taken this required report form, and we have essentially tried to build it into the end of your expenditure documentation forms. And I want to show you that. We have these periodic reports. And again, what we've done is we've taken the state's prescribed form, and we have created kind of a copy of it that will answer all the information that the state wants to know. Only we have built it into the EDF so that it will pre-populate with everything that you've already reported for us. So for example, on the approved budget sheet, when we put in here agency ABC, I'll pick one of our providers here. We've got Project Oz, right? It's one of our providers. So if we put Project Oz in the approved budget sheet, it will then automatically populate Project Oz. And when we put in, the grant number of, the contract number of 1, 2, 3, 4, 5, 6, 7, 8, 9, it will automatically populate your report for you. You can see there, item B is the grant number. So the idea is to try to reduce the duplication of inputting data. Now on this form, the only boxes on this form that you will actually have to fill out are those that are marked in green, like the date prepared, program income award to date, program income in the current reporting period, interest earned in the current reporting period, and then down here at the bottom where you'll sign it and date it. That's all the information that you'll have to fill out. All of these other numbers will be generated by the form. So everything that you report, so for example, when you report to us in November that you spent $6,000 in personnel and December that you spent $12,000, then when you file your first quarterly report, which will be due by January 15th, it will include the months of November and December in it, and it will show that you've got $18,000 of expenses in the personnel line item for the first quarter. And it will show that you've got $3,200 in expenses in the fringe benefits line item for the first quarter. It'll show you how much is remaining. So a lot of this, my point is, a lot of this is data that we were already capturing, and we were already doing it in a more comprehensive way than what the state's periodic financial report was going to capture. So what we did is we just designed an add-on to the expenditure documentation form so that you could use this form. You could use our EDFs, and it would automatically create your required periodic reports. So the contract requires quarterly periodic reports due the end of the second quarter, the third quarter, and the fourth quarter. The first quarter would have been due if we would have actually started our program on July 1st, but since we didn't start CYEP until the month of November, and for those of you who got pre-award costs, you'll still be in the second quarter because you will have started as of October 1st, which is still in the second quarter. So you will have basically 3 quarterly financial reports that you will submit to us, and they will be automatically generated. So once, with the exception of these green boxes that you'll fill in here. So once you go to submit your December EDF, which will be due on January 15th, that will also be the date for the due date for the first periodic quarterly financial report. And ideally, it should already be filled out. Now, I'm going to tell you, we just got last week a copy of this periodic financial report. It's actually been available, we discovered, since like August. It was created back in August. However, it was not shared with our Bureau, with DHS really as a whole. It didn't come out from our accountability officers until about a week ago. And so it was the first we had laid eyes on this, and we were kind of distressed because we were preparing your expenditure documentation forms to send to you, and now they're telling us, so well, we've got these new expenditure documentation forms, and we want them to do those on top of your expenditure documentation forms. So we were working really hard to get you something that is not going to be such a pain for you that you have to do twice. I want to share with you the implementation guidelines that we received from DHS, from our Chief Accountability Officer, Mr. Gary Kramer, and I'll share with you here. I'll send these to you. I'm happy to actually share these implementation guidelines with you. You can see these were developed early November. Again, we just got them last week. But when we took a look at these, it explains why we use the periodic. The PPR is the periodic performance report, which I'll share in just a moment. But the PFR is our financial report. And again, why these are required: efficiency for grantees and grantors, consistency of data, The reports link funding to performance, which is a federal requirement. That's something else we'll talk about a little bit. But we have to show that the funding that we're giving is actually delivering what the grant deliverables require. They talk about the reports and, let me go up here to the timeline that we've got. For example, one of the things that can happen if you don't fill out required reports is you can be put on stop pay status, which means we won't continue to give you any money until you submit the required reports. Fortunately, there's some flexibility in the implementation here, but the target for all state grantors, which that would be DHS, we're a grantor, to fully implement the new templates for reporting is by January 1st. However, they must be fully implemented by June 30th of 2018. So over basically the course of this grant period, we are going to be implementing these new reports. The good news is that they will just be dovetailed onto the back of our old reports. So it won't be anything that hopefully will be very, very burdensome to our grantees, okay? But I just wanted to let you know why we are doing these things and kind of why we have built them the way we have, so that you understand what you'll be receiving when I send you out these expenditure documentation forms. Now, we are required to use the forms the state prescribes unless we request an exception in writing to the state's Grant Accountability and Transparency Unit, GATU, which is responsible for overseeing the GATA process. We are required to request an exception in order to be able to use these reports, because they are different from the state's official reports. Now, they're not different in terms of substance. Everything that is on this report is designed to exactly mirror what's on the official state report. But they are different in terms of they're a spreadsheet and they're not the official PDF form. So we are in the process of requesting an exception. But so far, that exception has not yet been granted because we've just requested it. So this is what we're going to use for the time being, because we've got a little bit of time before we have to have full implementation. All right, we anticipate that our exception will be granted and that we will be able to use these forms instead of the PDF form, okay? And again, hopefully that will be more useful for you and for us. So that's the state of our financial reports. Also, we've got quarter 3 and quarter 4. We also have a periodic year-end report. I know some of you that were CYEP providers last year, I had to send you a note at the end of the year saying, I'm really sorry, this seems ridiculous, but can you please send me your cumulative sheet from your June EDF as your end of year, and call it an end of year financial report, because we assumed that the cumulative sheet would be more than enough since it captured most of the data that we needed. We were told by our state auditors that no, that was not enough, that you have to send the report specifically to us as a year-end report. So we have created here a year-end report. And once again, as long as you accurately report your numbers in your monthly expenditure reports, your final year-end report will be accurate. And you'll just be able to submit that as a final year-end report. And so we've tried to make this simple for you. So, and I'm going to read Stephanie's question here. It says, so for January 15th, we must turn in the report that you created and the quarterly report form from the state if we don't hear anything by then. I'm going to say no at this time. I don't believe so, because because our timeline for implementation, I know it says here, it says we've got to notify the Chief Accountability Officer in writing of all grant programs that will not be fully implemented by January 1st. My anticipation is that we're going to get our exception. I suppose if they tell us, no, you don't get the exception, then Stephanie, the answer to your question would be yes. You will have to fill out our EDF and send that on January 15th, and then also you would have to fill out the state's PFR. But here would be the good news with that, okay? The good news is it's already going to be filled out for you, okay? Even if you can't submit this, even if the state is crazy, and says, no, you can't use your form, you have to use ours, well, guess what? We're still going to use our form to create the data. And you would just take the numbers, and as ridiculous and redundant as it would seem, you would just take the numbers from here and you would type them onto here. So does that answer your question, Stephanie? Hopefully so. But that's the idea anyway. But that would seem to me to be ridiculous because when we have it in pretty much exactly the right form, it would be crazy, I think, to have to duplicate all that effort. That's exactly what we're trying not to have to do. So we do anticipate, though, that we're going to get the exception. Hopefully, we will be able to let you know that. But, yeah, I suppose as it stands right now, we don't have the exception yet, but we're counting on getting that, okay? And so we are counting on not having to fill this out. But just so you know, too, any of you who are providers who are working with state grants, other than the Community Youth Employment Program, this isn't just Community Youth Employment Program. This isn't just DHS. This is statewide. So this is a form that you're going to need to be familiar with because on other programs you likely will have to fill this out. But for us, we at least wanted to do our best to try to make sure if we were going to need you to fill out monthly expenditure reports anyway, in order to get reimbursed for payment, we didn't want you to have to fill out this quarterly report separately, okay? So that's the idea behind that. But yes, so we will get these sent out to you to begin filling in your expenditure documentation forms. Now, this is the state's periodic financial report. There is also the periodic performance report, what they call the PPR. The performance reports are also due quarterly per the terms of the grant agreement. Now, I'm just giving you a heads up, we are working on potentially an exception here. What we've said several times is that we expect that the Illinois WorkNet will be able to put together reports for us that will capture most of the data that we need. I'll point out a couple of things here. These look similar here, where you'll have the grantee information here at the top, the report period, etc. Notice this box in red here says responses to sections 14 through 22 may be provided in a separate format. All grantees must complete section 23. So let me show you here 14 through 22, which that's the deliverable, the due date, the date it was completed, etc. My hope is that we will be able to take the data from the Illinois WorkNet and substitute it for sections 14 through 22. That is my anticipation. Section 23, I want to show you what this is because this is fairly new for us and it is not going away. It's something we're going to have to find a way to get used to and to work with. But it is our performance accomplishments correlated to reported expenses. In other words, if you spent $40,000 during the first quarter of the year, what did that $40,000 do? How did that $40,000 correlate to your accomplishments? Okay? Now, we're still trying to figure out exactly what this means because it appears there's a box here where you either check yes or no. You would check yes, performance is consistent with grant-to-date expected services and expenditures or earnings, or you would say no, it's not. And then you would explain down here why it's not consistent, why your money that you've spent is not consistent. I think this is rather confusing because I think we need to give our providers some standards so they know. For example, how are you going to know if your performance is consistent with your expenditures or not if we don't give you some guidance on what that means? But the idea is that the funding is supposed to be tied to performance, and that's actually a federal requirement that has now been adopted in the state of Illinois through the Grant Accountability and Transparency Act, through GATA, that expenditures have to be tied to performance. And so when we fill out the periodic performance report, it should kind of go along with our periodic expenditure report. with the idea being that the periodic, the expenditure report, the financial report, would show what you've spent for the quarter, and then the performance report will show what you did for the quarter. And again, the hope is that the Illinois WorkNet will capture most of what you did. We are working really close with the Illinois WorkNet to design it in such a way as to be able to pull the information we need and to record the information we need so that you will not have to go through and try to figure out where you stand on the various performance measures. That as long as you have accurately reported things in the Illinois WorkNet, that it will do the calculations for us and pull the information that we need to know. But I kind of wanted to show you what is really coming down the pipeline here, that these things are fairly new to us, that we just got. We kind of knew they were coming, but we didn't know exactly what they were going to end up looking like. But this is going to be an expectation for all providers here. And so I wanted to bring that up, okay? We will continue to work with you on the Illinois WorkNet. We will continue to have our weekly webinars here. It'll be the same time, same place next Wednesday, okay? And we won't be doing these for the entire grant period for forever, but for the first couple months here, we will be doing weekly webinars where if people have questions or if we've got something new to go over with you, we want to make sure we have an opportunity to go over things. So definitely, if you're just joining us today and want to participate in future webinars, it's the same time and contact information next week. But this is what is expected of us in the performance reporting and the financial reporting. And so we have to make sure that we are reporting things as accurately to the best of our abilities, that we're in compliance, and that we're trying to make sure that the information that we're actually putting together is accurate. And so with that, I'm pretty much finished up. I will send out these expenditure reports. I hope to have them out by the end of the week. But I would say hopefully by Friday you'll get one of these, and if you have questions, let me know. Looks like maybe we've got go ahead and identify your organization if you haven't done so already on the poll here, so that we know which organizations were represented. I try to reach out sometimes to organizations if they haven't been able to participate, just to make sure they know. It looks like Hi maybe had a question. Hi, do you want to type your question in the box there, and I will try to answer it? And this is what I'll be sending out, and I just wanted to make sure you had an opportunity to view these. Rebecca Fernandez is our intern for DHS for the CYEP program. Rebecca will be helping me process these EDFs. So when you send them in, I'll give you directions on how to submit these. But this first one will be due by December 15th. When you send these in, Rebecca will be reviewing them. I'll be reviewing them with her maybe the first couple of months while she gets used to it. But so Hi's question says, so how does the state disperse the payments to the program? Is it by monthly basis or after we submitted our monthly EDF? So the answer is yes, if you look at your contract. So I know like last year, the CYEP program, most of the funds were distributed up front. That was kind of an anomaly. I'm not sure why it happened that way. It usually does not happen that way with programs. What will happen is that you are supposed to receive 1/8 or essentially 1 month of payments up front. And I know several of you have just gotten your contract signature pages signed and back. We will get those contracts to the comptroller's office. The comptroller's office will process and get you your payment. But we will basically get you a check for 1/8 of your total grant award. So you get a month up front, and then we will make reimbursement payments after that point. So in the future then, you'll be reimbursed for each month's worth of expenses that you turn in. So it's important to get your EDFs turned in in a timely way so that we can process them in a timely way so that you can get paid in a timely way. If you don't submit EDFs, you're not going to be paid, okay? Are there any other questions? I don't see anybody typing questions. Looks like maybe Hi's typing something else, but we'll go ahead and we'll try to conclude. And if you do have questions that come up later, definitely send me an email. Let me know, and I'll certainly work with you on these. I'll try to get these to you ASAP so that you can get your expenses recorded in them, and we will go from there. Bear with me too, because this is kind of a this EDF it's a work in progress. I've been working on it for some time to try to make it consistent and to make it make sense, to get all the formulas right, to lock certain cells and to unlock other cells. If you notice errors or you think that the EDF is not calculating correctly or something, definitely let me know, because it is possible. I'm going to try really hard to debug it before I send it out. But sometimes the first go-around, it may have a glitch or two. If it does, just let me know. I'll try to get you an updated EDF, and we'll try to tackle the problems as they come up. Have a good afternoon.